Do you own crypto?
I do, yeah.
The blockchain will help you accelerate the processes of transactions. The blockchain will help you identify who the buyers and sellers are. We don't need custodians anymore.
Potentially either accepting it through Apple Pay or otherwise?
It's something that we're looking at.
Next generation for markets will be tokenization of securities.
More tokenization of assets and securities could revolutionize finance.
If we could have that distributed ledger.
I'm still really bullish on crypto. You have DeFi, you have money transfer and some other applications.
The entire bond market is being transformed as we talk right now. It changes the whole ecosystem.
Yeah, that's right. The whole bond market being transformed. There's really two main catalysts for crypto going forward here. We're going to talk about them, right? It is the business cycle, the halvening, right? The business cycle, economic transitions policy, and it's Wall Street adoption. So let's dive into it. Let's not waste any time and get straight into it, right? First, let's talk about, Wall Street. Let's start with Wall Street here, right? So we're looking at the Twitter feed. If you want to take a look at this, first things first, Blackrock, right? Blackrock, for the first part, this is the largest asset manager on the planet, right? They do not get denied. They do not get denied. They got denied one time, right? In the entire existence out of 575 applications. BlackRock will not be denied at some point. That is Wall Street, right? That is the people you say, oh, they're scamming us. Well, they're telling you their moves. They're handing you their moves. Okay. They're going to tell us what's happening. And this is why this is so important for crypto adoption in general. Even though the maxis say, oh, well, we don't want BlackRock to have it. Well, this is how the world works, right? A spot Bitcoin ETF unlocks about $30 trillion. So this is the retirement system right here. Okay, you could see that in 2021 at the peak of the bull market, the equity market, which is the collateral to the system, we were near $40 trillion. So we'll be well above that into 2024 when we hit all-time highs. But the point here is the spot Bitcoin ETF unlocks this market, right? This retirement system, including 401ks, Roths, pensions, and then you get mutual funds. This doesn't even account for mutual funds, hedge funds, endowment funds, family offices, real estate investors, right? Investment banks, big investment banks, Goldman Sachs. And then you have sovereign wealth funds who usually invest in equities, right? So other countries, other billionaires, millionaires in other countries, they want US equities. They want exposure to that. They don't want to get their keys. They don't want private keys. They want US equities. Now the Bitcoin ETF becomes a vehicle that they can now park their value into. They don't want to deal with private keys here. This is the point of BlackRock. Individuals, they have too many other things to worry about. They don't want to deal with private keys. So $30 trillion unlocked there, right? Now moving forward, that is the demand coming into the market, right? Whether the timing is next month, in 6 months, or 1 year, you're front running it. You have the information now, right? The upside. So what you're getting here from the Bitcoin cycle, this is Bitcoin anyways. We're going to get into crypto. We're going through all the catalysts here. The upside demand shock from the ETF is going to increase the price. And you, at the same time, you have a downside supply shock. So you got upside demand shock. It's almost like right now we're seeing oil surge, but this is oil surging with the lower supply. Imagine if there was demand coming in for oil and the supply is down. That's where you get inflation, right? This is where you get upside on asset prices. So huge demand coming in, demand shock for the ETF, downside supply shock because the halvening cuts the issuance. It cuts the supply of Bitcoins coming onto the coming online, right? And this makes Bitcoin go much higher as usual. We always see after the cycle, we're heading into the cycle. 2024 is the midpoint, right? So huge demand shock and supply shock at the same time. Now moving over, right? That's the Bitcoin cycle. Bitcoin is the king of the store of value asset that's going after digital gold. But also there's another narrative here. It's not just the Bitcoin ETF, right? The other catalyst is tokenization. And let's talk about this. The largest asset manager in the world on the planet wants to tokenize everything, right? This is BlackRock saying, hey, we want to tokenize the world. And there's a real reason for that, right? They've been writing about this. They've been talking about it. Larry Fink's been talking about it. And there's an incentive for it, right? Here's the incentive. Now, here's the largest central bank messaging system, the SWIFT network, also wanting to tokenize everything, right? Why? Increase efficiencies, reducing cost, enable fractional ownership, blah, blah, blah. The point being here is these large entities, the biggest Wall Street, the central banks, they're looking to use crypto. They're going to plug in here. And you might say, why? Why would they want to deal with crypto? Well, here's one part, right? There's two parts of it. Here's the first part. The tokenization of all assets, real estate, bonds, equities, real world assets. This market is huge. Home equity, equities. You could just look, there's a 16x, right? Not 16%, 16x, 16-fold projection of growth for tokenization on the low end from these banks, from these entities. That's what their guess is by 2030. Okay, 70x growth, and there's all kinds of projections. Nobody knows the exact level, right? But these are some big numbers here. And so you see that the tokenization of bonds, equities, real world assets, you know, we're talking about stocks, we're talking about real estate, gold, etc. That is what they're speaking of here, right? Now you go to the World Economic Forum, right? Oh, the guys that are controlling the world, well, what do they want to do? They also want to revolutionize finance by tokenizing. And we're going to get to how they benefit here. But this is the big, this is the big one here, which is there are 867 trillion assets to be disrupted by tokenization. This is, from the World Economic Forum, right? You go to some other banks, BNY Mellon, they say most investors, institutional investors, they want to tokenize assets. And there's a real reason for that. There's a fundamental driver of that, which we're going to get to. Citibank, very bullish, 80x expected growth rate by 2030. That's insane, right? Okay, now here's why. Here's the fundamentals why. Here's where people get bored. Because there are various benefits for SWIFTs and other central bank messaging systems, or banks in general, to use blockchains, because it creates that efficiencies. And here's some of them: enabling fractional ownership. What does that do? It increases liquidity. It gives other people chances who can't own real estate. You can't buy a house, right? But you can now dive into real estate, and it shows up on the blockchain. You don't have to pay all these custodians. You actually own some real estate. Maybe you get some fixed income, right? It opens up the market, increases liquidity for everyone. It also streamlines settlement, issuance, transfer process, reducing administrative and operational costs. So for these asset managers, for the banks, for SWIFT, for BlackRock, and these giant managers, they're paying fees for people to do this job. So you think of AI. What does AI do? It cuts down the jobs, right? It makes things faster, cheaper, more efficient, and you save cost. Well, so does blockchain, but it creates more security. Versus AI is more of aggressive. This is more security. This is more defense. So it automatically does the jobs of these administrators, right? The operational expenses. It also enables programmability, so you can actually program specific use cases into your into your operations, which is not, that doesn't exist right now. Those are smart contracts, right? Also provides immutable, here's the big part, immutable, auditable record of ownership transactions, reducing the risks of fraud, improving compliance, and potentially enabling new products. So it's also defensive. It also protects your value over time. So that is the, BlackRock, SWIFT, these giant asset managers, the biggest banks in the world, their incentive is money, to make more money. So to tokenize the world, they're going to make more money. To on-ramp Bitcoin, they're going to make more money. And we're going to get why Bitcoin's so important, why they're not just going to save cost and increase our efficiencies, but they're also looking at this. And what is this? This is user growth for crypto, right? From looking at the early 90s internet compared to crypto from 2016, the crypto market. Yes, I know Bitcoin came out in 2013 or 2008, 2009, but the crypto market in general, the overall crypto market, right? 2016 looks like the early 90s internet, right? It is growing faster than the early 90s internet. It is outpacing the early 90s internet. Oh yeah, we had the dot-com bubble. I get it, but let's get through that. We're going to get there. Crypto should hit 1 billion users heading into 2025. Okay. Which was comparable to 2005 for the internet. So over the next year and a half, right? You got about 18 months. You're projected to hit 1 billion users in crypto. It could undershoot that. We could overshoot that. Who knows? But this is like 2005. Well, who were the monsters in 2005, right? Who were the monsters that we saw in 2005? The Magnificent Seven, or what came out of the internet, right? Amazon, Apple, Google, Facebook, Microsoft, right? Those came out of 2005. That's what the value of the internet bring, a network effect, Metcalfe's law, that grows at that rate. We have nothing growing at that rate that brings that type of value. And now we see crypto growing at that rate. The question is, who are going to be the winners, right? And we can go over that later. So you get the Magnificent Seven out of the ashes of the dot-com bubble. the dot-com bubble messed that up. So the business cycle, right? And that's what we're going to head into next is, well, okay, well, yeah, the internet fell apart though in 2001. Well, there was a black swan event, fiscal policy was not so great. This is the business cycle. And this is the other catalyst going into this crypto cycle. This is the next catalyst here, right? You got to pay attention to this. Over the past 20 years, Fed printing has exceeded the gains in the S&P 500 and Warren Buffett's Berkshire Hathaway. The Fed printing press, the Fed's balance sheet is outpacing the value stock, the king of all value stocks, Berkshire Hathaway, right? Warren Buffett's Berkshire Hathaway can't even keep up with Fed printing. Neither can the S&P 500. So they're not nearly as close as how much the Fed devalues, debases the currency. Most assets just cannot keep up with the pace of currency devaluation. Not real estate, right? Maybe some individual businesses, maybe some individual stocks, but for the most part, most asset classes cannot keep up with the Fed's balance sheet. Okay, the liquidity coming from the Fed, how they debase the currency and create more debt and devalue your dollars, devalue your buying power. That's what this is here. But the NASDAQ, on the other hand, has, the NASDAQ has disrupted, is a disruptive technology. The NASDAQ holds Apple, Amazon, Google, Facebook, Tesla, Nvidia, Netflix, right? And this actually has outpaced the Fed printing over time. You could say barely, but it has outpaced the Fed's printing because it is the most powerful tool. Technology is the most useful tool, if it works, for economic growth, right? For productivity, to increase your production, your GDP at a smaller price, right? To lift people out of poverty. So that's why the NASDAQ outperforms these other assets. Okay. And what does that mean? Like when we look at the biggest companies, what do they deliver to what do they deliver to our generations? iPads, Macs, iPhones, other services, Apple, right? Apple, whatever. Google surpassed Yahoo in the early 2000s. They gave you Google search. You use it every day. Maybe you're shifting now, but you're using Google pretty much every single day. Maps, whatever it is, right? Microsoft, Xbox, right? Windows, other compute stuff, mostly for B2B. A lot of cloud stuff for other businesses to grow on. Facebook, you all know. Instagram, you have Facebook, obviously, ads, blah blah blah, right? The whole gig economy. Amazon, AWS, people doing Shopify, people, what is it, drop shipping. Like, this is what it provided. This is what technology does. It increases GDP, it increases productivity, and you have a whole new market. You have more growth from there, right? The hard part is, how do you see that in crypto? Well, just as an asset class, how about a crypto versus the Fed's balance sheet and versus NASDAQ? It's not even close. This is the total crypto market. So we're not looking at the past decade, but if you look from 2014, which is when the total crypto market pretty much started to take off, when you got these altcoins, right? Versus Bitcoin, it's the same thing. But if you look at the overall crypto market, it has by far outperformed the Fed's balance sheet and the NASDAQ. What does that tell you? What does that tell you? That tells you that not many things outperform the Fed's balance sheet, but crypto is one of those things, and you should be paying attention. Okay. Now next, the next catalyst, right? We're going a little more macro, the macro business cycle catalyst. So when we cover this, right, we know BlackRock, we know the big institutions, right? Adoption is coming from them. They're going to unlock all that money. We also know that crypto is outpacing everybody else. We're at the bottom of the cycle, right? Oh my God, we're falling. We're going to go over the price action. But this next thing is just the technical. It's just the macro. It is the economy, the business cycle driving crypto. And most people don't understand this, right? Let's go in this a little deeper. So what we have here is the ISM cycle. This is economic activity up and down. These are the cycles of the economy. This is the US manufacturing cycle, which leads the world. So that's why we're using this one. And you can see here below 50, right? Below this 50 level in red, you have contraction. This is when the US is contracting. This is when the US growth is falling. And when you go up, the US growth or projections of growth or economic activity starts to pick up, right? We're still in red here, but these have marked pretty much the cycle bottom for crypto, right? We're looking at Bitcoin here. But once you get to the bottom, pretty much growth picks up. Investors start to put on risk. They want to put risk back on institutions, whoever it is. And the peak of the ISM, the peak of the business cycle, typically coincides with the peak of Bitcoin, with the peak of crypto. We saw that back in 2018. We saw it again very sharply in 2021. I remember the business cycle peaked, ISM peaked in March, April, when inflation started to double and Bitcoin peaked. right? In April, March, along with ARK, the most risky assets. Now it did make it did try to retest the highs, but that was it. That was pretty much the top. You caught 80% of the move, 90% of the move. That was it. The ISM came back down. So we know Bitcoin is very correlated to the business cycle, right? That's not in question. I'm thinking by January, right, 2024, given the fiscal policies coming online and just seeing how the cycle is starting to bottom here, right? We're starting to bottom out in the business cycle, led by new orders, led by global liquidity, which we're going to get to. I think Bitcoin's putting in a bottom here at 25K. We're still holding VWAP, and we'll go over those technicals in a second here. So next, global liquidity. Bitcoin is very correlated to global liquidity. Right now, China is pumping that global liquidity. China is cutting rates. China is easing their macroeconomics or their housing market. They're easing their markets. They're trying to inject more capital without destroying their currency, but they are easing. They contribute to that. Japan still printing money, and the U.S. is next, right? Just the Fed pausing, which we're going to get some very good signals tomorrow during inflation, is going to increase global liquidity here, right? The US is very close to ending the hiking cycle. Okay. Now, when we look at Bitcoin versus global liquidity, you see, I mean, it's pretty damn correlated, right? It is pretty damn correlated. Where Bitcoin goes up, money printers go on, Bitcoin goes up, right? You cut rates, Bitcoin goes up. Fiscal policy, Bitcoin goes up, right? So this is very correlated. That's why we pay attention to global liquidity, and we're at the lows here, right? Some people will tell you, oh, global liquidity is going lower. Well, when economies weaken, global liquidity actually turns on, right? So, that's more up for debate, but I'd argue we're near that zone. Now, this is today, right? This is looking at today. This is the Fed, the US Fed's net liquidity, which takes, money printing from the Fed. It takes the RRP, which is liquidity at the Fed. It's leaving the Fed. We talk about this all the time. And basically, you take the net liquidity minus the TGA, which is the Treasury General Account. And look at these. Look how close the total crypto market is compared to the Fed's net liquidity. They look pretty much damn identical. Why is that? Because crypto is the riskiest of all assets. And when the business cycle bottoms out, when it's time to put risk on, which people say, oh, well, I don't wait till everything is clear. Well, guess what? Big money doesn't wait, right? Big money is looking 12 months out. They're looking forward. They're not looking at now. They don't trade off the news that's happening today. They trade off what is coming, what is to be. And so when you look at FETNED liquidity, you see that it has already bottomed. It bottomed back in January, where you had the big rally coming in, right? When the banking crisis hit, what did you get here in March? You had crypto surge. Because these are signals that forward-looking liquidity is going to start coming in. These are signals that, oh my God, the global economy is weakening, but the cycles are turning. The Fed is at the end of the hiking cycle for the US. So crypto is an asset very sensitive to liquidity, the most sensitive. NASDAQ also. So as this liquidity breaks out, crypto is going much higher. The crypto market, this is a catalyst for the crypto market, despite the ETF. Even if you don't get the Bitcoin ETF, okay, let's say you don't get it this year. If liquidity picks up, crypto's going higher. Okay, crypto will be going higher just by default. That is one signal there, right? Maybe the tokenization thing is a little further away, but catalysts are real. Catalysts are not fake. Now, why is Wall Street so interested in also capturing this crypto market? You might say, oh, well, it takes big money. This is sort of why. Don't be fooled. Wall Street wants this asset class, right? Because retail investors, this is probably the most resilient. Other than Tesla holders, this asset class is the most resilient. And what you really have here is the number of crypto owners grew over 100 million during the bear market in 2022, while price declined, right? So while these are the wallets, these are total crypto wallets. You have 306 million in January of 2022. Basically, when everything rolled over, we went to the Fed tightened rates. Liquidity started getting drained in March around here. Global liquidity started getting drained from the Fed. They started, sucking liquidity out of the market. We went into a bear market. The NASDAQ sold off 30-something%, 40%. S&P sold off 27%. That was a bear market. That was a recession that the market priced in, all while the crypto wallets continue to go up. Because this is not just a US phenomenon. This is a global phenomenon. People don't understand. And there's a big thesis to it. So this is also why Wall Street wants crypto, okay? Because of the huge narrative, right? That's what's going on there. And what up, Dimaj? Nice to see you doing well. Good, you too. Good to see you back, Dimaj. So we're gonna look at really quick, what is the price action looking like today, right? What is the price action looking like today for Bitcoin? What is the macro setup, right? As we wait for the Bitcoin ETF, as we wait for Blackrock to step in and tokenization to start coming online, probably when liquidity turns up, that's when people start to take risk and invest in these projects. And we're getting very close to that. So taking a look at Bitcoin today, just Bitcoin, not the crypto market, which you should understand is that we're still holding the anchored VWAP from the lows, right? If you go to the lows from November of 2022, these were the lows. That's funny because the peak was November of 2021. So 1 year later, Bitcoin hits a bottom. Maybe put that in your pocket as a trader. Okay, you hit the ISM peak. Once Bitcoin peaks, let me look a year out. It's not perfect, but it is a correlation. So from November of 2022, which we're headed into November in a couple months here, right? October, November, we're up from those lows. At this point, you're still up 57%. Today, 68%. Wow. They're telling you everything is nasty, but it's still up from the lows considerably, right? We're still holding this VWAP trend, this anchored VWAP, which gives you the volume weighted average. You're still holding that trend. And whenever you come back, right, when you look at the RSI on the daily, the RSI got extremely oversold and is now pumping back up. Doesn't mean crypto is going to pump today. What it really means is how close is the Fed, because that's their closest catalyst. How close is the Fed from pausing? The Fed pauses automatically when the Fed announces the pause. They probably won't announce it, but they're going to let it happen. It's all about inflation tomorrow. Once you get that pause, then you see that yields, right? These are interest rates from the bond market start to ease. They start to ease off. They start to come off. 10-year yields start to come off, and they're not surging. We've been watching this chart. Are they going to rip higher? Not happening, right? And so these ease off. Well, that's going to, make sure collateral is a little safer or, less risky, which is why the MOVE index bond volatility also comes down, because that signals, hey, your collateral is not at risk. And then you have the dollar start to ease off because people are not rushing into the US dollar because the Fed now has paused. And what that means is going forward, rates can only go lower from here. They're not going to go higher. So now you start taking risk on assets instead of collecting cash at the money market funds, which is exactly why we see money market fund liquidity leaving. And today it's moving higher, right? This is very bullish. If you look at NASDAQ, actually, let me remove this. Actually, I'm going to go to US. Let's go to equity futures. If we go to US equity futures, and look, this is the macro catalyst for crypto. Those other catalysts, you have a triple stack here. You have tokenization, which is going to take a while, but it's going to come into the news cycle. It's going to be in the business cycle pretty soon, probably in 2024. The ETF is very easy. As soon as you hear the ETF is out, I mean, any signal, it's going higher, right? You got Gary Gensler talking today. There's probably a lot of comments that were dovish or hawkish or bullish for Bitcoin and bearish for Bitcoin, right? So that's coming. We're near the end of the hiking cycle. We're near the end. We're closer to the ETF getting signed by BlackRock. And this is the money market fund liquidity. So what I wanted to do was compare it to the S&P, SPX or S&P futures. Where the futures? Here we go, futures. And what you see is like they've been trading pretty much 1 for 1. Look at that, right? They've been trading 1 for 1. So this is keeping liquidity strong right here. This is Fed net liquidity. If this continues to go up, what you're going to see is this breakout. This is in a strong, a strong wedge pattern. If you're familiar with patterns, which is liquidity. Fed net liquidity. So you can see money market fund liquidity coming back into the market, right? When it drains down, it's leaving the market, bottoms here in January of 2022. And some people say, okay, that's the bull market. We go up, right? It finished off selling, or it finished peaking into that, into the Fed's reverse repo facility, started coming back in. It is surging right now. It is surging. So I really do expect right now, it's almost like a beach ball. Everybody's expectation, they're a little fearful of what's going to come out tomorrow of inflation. But we all know oil prices, we'll get to oil, are leading inflation on CPI higher, right? But guess what? Tomorrow's print doesn't include this month. It includes August, which was pretty much flat. So this liquidity is coming in and that print will be better than we actually thought. I think that print's going to be better. We talked about this yesterday. So as long as this money market fund liquidity keeps coming into the market, this Fed net liquidity goes up, crypto goes higher despite all the fear. Oh, and you're getting the sell off of assets. FTX having to sell their assets, putting them on the market. Well, that's not enough pressure. That's just not enough, right? Crypto has eaten up every bad scenario and is up 60% on the year. So, I mean, I'm just basically warning, this thing is about to blow off the top pretty soon here. It's about to blow off top pretty soon. I know people are extremely bearish, but that's why, that's the opportunity for the big dogs to start to step in. Everybody's fearful. Liquidity is actually picking up. The Fed's about to start, pausing their rate hikes. Core inflation is falling and probably falls more than people expect. Yes, oil is surging, but the month of August, this is what we're going to get tomorrow. We're going to get the month of August. And what that tells us is at the beginning of August to the end of August, inflation was up. Oil was up 2.5%. That's it. That's not going to be a big factor. Shelter is going to fall pretty hard. Shelter is going to fall pretty hard, right? Transports will be hot. Transportation services will be kind of hot tomorrow. We're going to get all that data, but liquidity is picking up. This is the chart I keep harping on that just barely started in 2021, and it is now a factor from the Fed. It is global liquidity. I'm not global liquidity. It is a big cushion coming into the damn market, right? Maybe these people are buying energy. Who knows? Energy stocks are up, but this is fueling the market, and it's going to go into crypto, right? Larry Fink, Swift Network, these big players that people always complain about, oh, they're manipulating the market. They're telling you what they're about to do. They're telling you what they're going to do, So it's up to you to take the information and make a choice off it. Maybe you don't care. Maybe it's not important, but hey, most people are in a crisis of asset investment, right? You see that most people cannot beat the Fed's balance sheet. Most assets are not. Warren Buffett isn't. He got lucky with Apple. That's the only reason he's beating the Fed's balance sheet. Other than that, he wouldn't even be beating the Fed's balance sheet. Technology always outperforms if you pick the right ones. And that's what brings you to, what are the right cryptos? We know Bitcoin, Ethereum are the best commodities. Ethereum is Web3. Ethereum unlocks, right? Looking at the Ethereum price, Ethereum does unlock NFTs. NFTs can only be really replicated in stable coins with the Ethereum network. This is the platform that supports DeFi. And what's really happening is with tokenization is these institutions want to tokenize their assets to move them on chain across different blockchains. Well, in order to do that, they need a protocol, Chainlink. They need Chainlink, right? And in order for them to access DeFi, they're going to be accessing Ethereum, right? And Ethereum has all of DeFi. Most of DeFi is on Ethereum. Forget Cardano, forget all these other Web3s. They're not nearly as sound, as strong as Ethereum is, okay? So getting back to it, DeFi, stablecoins, metaverse, NFTs, right? Whatever it else, layer twos, those are all built on Ethereum. So when the central banks want to access, or the commercial banks, JP Morgan, Wells Fargo, Citigroup, whoever it is, Bank of America, they're also bullish on crypto. They're going to access it through this, through a tokenization. They're going to access it through CCIP more than likely to access Ethereum. So those are the big three catalysts here. Liquidity is turning up. Tomorrow's inflation. Everybody's negative. Everybody thinks, oh, we're going into a deep recession, but you have fiscal policy coming online. Right? The biggest negative factor right now is oil, and oil is pretty much creating some risks, but it also fuels S&P earnings, right? S&P earnings are also turning up, so that will create more profits. The consumer is not going to speed up. The consumer is going to slow down. Oh my God, we talk about the student loan crisis, right? Bro, nobody's paying those student loans. It's not going to take away from their spending. And the people who are spending, most of them who are spending a lot, they don't have student loans, right? They've already paid off the debt. Most of the taxes that are paid in the US are from 90% of the taxes paid are from the 1%. That's who's spending money here. Okay. So student loan, the people who have student loans have to pay those off. They don't spend much anyways. Okay. So it'll barely slow down the economy. It is not going to collapse the economy. Everybody keeps saying that debt is the system. This is the system that we live in. Create debt, spend, consume. The most important thing is that the asset markets do not collapse, because that is the collateral that holds everything together, right? The retirement system you saw drop $10 trillion from the peak in 2021 because the asset market is backing everybody up, right? Mortgage market is not going to collapse either. Why? Because most people locked in low rates. Not going to happen. So comments, what up, Dimaj over there on YouTube? Comments, if you guys have any comments or anything. They get lost in the TikTok algorithm, so you could throw them on to YouTube if you want to go support. What happens when Slabs fails because people don't pay back their student loans? Slabs, I don't even know what Slabs is. Student loan, student loan something. Well, look, universities more than anything are probably going to take this. They're probably going to fail more than anything, right? The biggest threats really to the market are going to be or the economy, and this is Fed liquidity. I'm keeping that up there because it's very important. Look, Ethereum is literally just bouncing off VWAP, off of the lows from that it put in June of 2022. So, I mean, this is tight consolidation here. So you said, what happens to if the people don't pay back their loans? I mean, for the most part, if people don't pay back their loans, just debt accumulates, right? They just don't. Does it hit their credit? Maybe, maybe not. They probably go into some type of. They probably sign up for. There's going to be more government handouts on to keep this ball rolling for debt. It's not that big of a debt burden. I know it looks like it's big. It's not going to default. The U.S. government will continue to increase the debt ceiling. That's what they're going to do. They're going to keep increasing the debt ceiling. People think that at some point somebody's going to pay off the debt. It is not getting paid off. This is the system we lived in. It gets higher. The debt continues to climb. The question is, are the debt payments growing faster than the GDP? That's the real question here. And technology is the only thing that can solve that can produce more, faster, cheaper, and actually create more value at a faster pace than the interest payments. You also need lower rates, which brings us to the next thing, which is these high rates cannot last. They cannot continue. So the Fed will orchestrate a slowdown, right, to some degree. And they really just want to see core inflation collapse. The reason they don't use oil or headline inflation, which we all look at headline inflation, but they're not going to gauge headline inflation simply because it's too volatile. It moves up very fast. So they would have to increase rates. All of a sudden they cut rates and they increase them again. So the best thing to do is focus on core, and core is now coming down. And also because these are lag effects, right? Rents, housing prices, all those things, those are all lagging indicators. Jobs, unemployment, those are all lagging indicators, which tell us a slowdown it was already coming, right? So the crazy thing is, the real funny thing is, people look at these lagging indicators. They look at, oh my God, look at unemployment is going up. It probably goes up to 4%, maybe a little higher. And by the way, the Fed has always paused or cut rates when unemployment went up 0.5% from the lows. 3.4 was low, so 3.9, which we probably will see in the next couple months. Does that cause them to cut rates? No, it just puts more pressure for them to hold the rates where they're at. And if we do see, unemployment spike above 4%, while core CPI comes down, they probably do cut rates earlier than people actually think. So oil prices are surging, making new highs, probably going to next level 92, right? We played the level, got past 83.50. Now we're going to 92. So that's what we're looking at here. Big man's coming. Would you say China dumping bonds? We're all going down. I'm a buyer. Yeah, China's not a buyer. China's not buying. Japan is not buying. And the Fed is not buying bonds. So that's a lot of supply there, right? It's a supply issue more than anything. You have a huge supply issue because they're not buying bonds. And at the same time, the U.S. is issuing more bonds. But we know that slows down on the long end over the next couple months. So the real question is, who comes into the bond market? But again, stocks like Tesla, NASDAQ, they're going to grow much faster than a 5% interest rate, which means rates aren't going to be that big of a deal. They never were in the past. If you go to the past, rates did not slow down. 5% rates did not slow the S&P. The S&P still went higher with high bond yields, right? So, some companies will struggle, which is why it's like, hey, focus on the big dogs, right? Who are the big dogs? Well, Amazon, Apple, Facebook, Tesla, Microsoft. Those are the big dogs, right? The big tech can still weather the storm in a slowing environment or in a high rate environment. So what happens when, you go into the fourth quarter and you get this rolling recession, things slow down, core inflation comes down. We know vehicles are coming down. We know housing is coming down, and then the Fed cuts rates a little bit, right? Or the consumer does really start to go negative. Job openings are falling. That is a recession. Job openings falling is a recession. What happens when we see payrolls go negative? That's when the Fed probably cuts rates. You see payrolls go negative. You get employment above 4%. I don't even know if that really happens though, because of fiscal policy, because we're headed into an election cycle where the Fed, where the policymakers are definitely they get your vote by printing money to some degree. So we'll see how that plays out. I think we just stick with high rates, but I think we're going to pause on this one going forward. I'm a buyer of NU. Okay. What else do we got here? Yeah, we're looking good here. And then Tesla finally pulling back a little bit. So we'll do a little transition. Dimash, how's it going? We'll do a little transition into the technicals, into Tesla. You know, we got the Tesla news yesterday, which was very explosive, right? Very explosive. Where's Tesla at? Where are we at? Okay, and now you're getting that consolidation for Tesla, right? This is your opening. I actually want to shift over to the other charts here. I want to shift over to the trading charts just because it's a lot easier to see price action. And tomorrow is inflation. Tomorrow is CPI. Going to be a lot of information that comes out on that, and I'll be here to report on it Wednesday. And then we get PPI after that. But yeah, right now we got Tesla consolidating between these levels. They probably have the strongest catalyst here. Tesla has the strongest catalyst. It's gonna take the stock a lot higher again. AI, Dojo, Dojo, AI, China increasing production. Deliveries come out again pretty soon. I actually got to check when do they release their deliveries. Let's see. And then let's get this chart up there. Super bullish, buy while you can. I mean, that money market fund liquidity coming in is what makes me bullish. We know global liquidity has also been picking back up, right? As long as that bond collateral doesn't explode on the second day of the month, reports quarterly deliveries figures on the second day of the month. Okay. Second day of the month. So that's when we should expect deliveries. So what, October 2nd. So we still got like we still got 3 weeks before Tesla reports those deliveries. Looks like we're going to consolidate a little bit into this inflation print. Exactly. Stay bullish while you can. I mean, it depends, how you're entering the market, how you're looking at it. But for sure, this is a huge transition for a lot of people. Nobody agrees right now, right? A lot of people are just very bearish and being told like things are going to collapse. But by the time the economy does weaken, if it does considerably, the market already priced it in back in 2022. It priced in a deep recession. NASDAQ down 37%, I believe. I mean, come on. What do you think the market's looking 12 months ahead? People trade now. If you're looking far out or investor, the market looks 12 months ahead. It looks 6 to 18 at some point, 6 months to 18 months ahead. And that's debatable, but that's typically what it does. All right, let me switch to these charts. Make sure we fit it in there correctly. All right, so S&P, what are we looking at today? How did S&P trade last 30 days? Let's see, what is the S&P doing these last 30 days? It is wedging. Look at that wedge. Nice wedge there for the S&P. Slowly grinding up a little bit. Nothing too crazy, nothing too wild. It's looking at CPI. I said it'll be consolidating until we hit CPI tomorrow. I don't even think it makes a big move either. You got to see the initial reactions and then how it digests CPI. Got resisted at after it got above that gap fill, it came right back down. So yeah, this makes sense, right? It's right in line with the thesis here. Let's go to the trader chart, see what we're seeing. What is it looking like? Oh, okay, big upside move at 8 a.m. Closed the gap, got rejected hard. That would have been a nice short for you gap fill reversals. Talking about technicals, when you see a gap fill like this, capitulation, I mean, man, those zero dated options are pretty strong. I used to trade these, but not now. One day I'll get back into it. So yeah, that's S&P, a lot of weakness at the end of the day. And we got above yesterday's level. So the market is really selling off into this. Remember we said the market will either bid up into the inflation print or bid down. I like it better when the market sells off first if I'm bullish. Why? Because typically they're pricing in negative news. They're pricing in the worst. So if it does come out slightly worse, it's either neutral to bearish, but if it comes out normal, the market pretty much bottomed at that point. That's pretty much the bottom of the market. If it comes out good, it's going to explode higher, much higher. So that's what it looks like on that front. Now, what did Tesla look like today? Is there any entry points? Because this is the thing I know a lot of people are looking at. Where do I enter at? Tesla could very well come back and fill this gap at 248 if the inflation numbers are bad. If not, then you're probably looking at, let's take these off. You're probably looking at support here at 260. Yep, you got the 260 report, support. $260. I mean, this was a wedge. What, 250 is a big level. Yeah, it looks really interesting. So I think 260 is your level, 260 and then 250 and then 241, which I missed. I should have got in there at that 241. Remember that day we talked about, I pretty much could have added to that. I was like, oh, damn, we gapped up and I was like, dang, I could have had some size, but that's fine. Still looks pretty good there. Qs. Are we holding 373? Nope, we're flirting right with 373. That's the important level. So pretty much for the Qs, anything below 373, very bearish. If it holds, like you can see here, it gapped down, but it didn't hold below. It got right back above. So 373 for the Qs is the big level. You could say 371 to 373. I call it 373. I think that is the big level. 375, it closed the gap and then it got below it, but I like 373. There's been more touches. 372 to 373, there's been a lot more touches there at that level for the Qs. Also looks like the Qs could be just forming a flag pattern too. Right here. Nice little flag. But, just like it did here, they had a falling flag or a falling wedge, whatever you want to call it, bounced over. It probably got oversold here too. Started to bounce, came right back up. A lot of buyers came and stepped in. So it's going to come down to inflation. What is inflation going to look like? 442 for S&P. Let's see. I don't know about 442. 442. I mean, I'd even say 443, big man. I'd say there's a little more there at 443 for my view. Unless you're looking at that gap. Nah, there's a gap to fill at 440. There is a gap at 440 for the S&P. Who knows? Appreciate the support though, big man. All right, so those are the Qs. Now, what is IWM looking like? What is IWM? See what these other things are looking like. IWM is consolidating. I think the Dow is doing the same thing. Let's take a step back here. See what we're looking at. A lot of consolidation. It's not terrible. Dow consolidating also. Let's look at the quarterly moving averages here. We got to go to the weekly. This is a weekly chart. Still holding that last quarter well, no, this is the last 2 quarter of earnings. Okay. Still holding that. So you're getting a bull cross here. Okay, we'll see how that plays out. SPY. I still holding the last quarter of earnings. It's pretty bullish, honestly. These are the quarterly moving averages. Hey, it looks like SPY is really just forming a wedge also up here. Look at that. Nice little wedge. We either break out or break down on CPI tomorrow morning. What are your thoughts? What do you think we see going into CPI? We'll see how that plays out. Google. Chugging high. I mean, nothing's really changed for everyone else, right? Nothing has really changed. I think the other big catalyst is going to be Apple. How does Apple perform with the coming out with its new services? I'm sorry, it's new product, new services. Apple's still holding the big 173-ish level, 175, 170, still holding the level. I mean, there's buyers down there. There's a lot of buyers down there. It's where it gapped up also, filled that gap, supported that gap. You can look at Zoom pulling back a little bit here. Oh, AMD. So I am still looking at AMD here because it is presenting itself. We're making a higher low on AMD. 103. That's 2 capitulations at 103. So for a nice setup here, if Tesla takes off if I don't get an entry on Tesla, I'm definitely going to be looking at AMD for some type of lift higher. I think it priced in a little bit of bad news. You had a couple strong holds there over the past couple days. Let's see. Yeah, a lot of buyers there. Look, we came down exactly to 103, capitulated higher. Nice step in for the buyers. AMD definitely looks good. Yep, AMD is a good one, bro. I like that. Who else do we have? Oh, Okta, Twilio. These are just some cybersecurity plays I think can do some damage because cyber is going to be a huge catalyst for the bulls. I'm sorry, a huge catalyst going forward, cybersecurity, especially during the elections for next year. So you got Okta, you got Zscaler, Okta, and I used to trade these back in the day, but you got Okta here. I mean, very nice setup. It looks like it's trying to press that wedge. And then let's actually switch this up to the daily macro. There we go. So hey, you're almost getting a golden cross here. Whoa, Okta looks good with the moving averages. A lot of tightness. Gap down. I wonder what that was. This is not a day trading stock either. Okta's pretty much, you just got to hold it. But yeah, over 91.50, Okta should pretty much explode. Especially you're getting that tightness on the moving averages. And the 50 starting to move above all of them. You just want to see a pullback. How about Zscaler? I know Zscaler has been looking good. NU, oh, you like NU as a winner? Chicken dinner? You're going to look at those? NU? I don't even know. Yeah, I know you always talk about NU. I just don't know the story for NU. And I think I've looked at the price action. I don't think I liked it that much. Let's see. What is this? I don't know. I just don't know the secular story here. That's it. NU Holdings. I mean, it looks strong. I like that break earlier. The break above $7. Yeah, that was pretty strong. Very strong channel gap up. Second day play moving above the highs today. I wonder what drives this stock, man. What drives NU? They got upgraded for sure by JP Morgan. Is it a financial management system? Oh, Warren Buffett or what? Twilio, TWLO. Also a lot of consolidation. These are just plays I think are going to really explode once the Fed does pause. If they announce it, which maybe they won't announce it till November. You definitely want oil prices to ease back down. But as long as you get progress on core, I think we're in good shape here. So let's see. Yeah, that looks solid also. Warren Buffett. Okay, that makes sense. All right, well, we'll just do some SPY. If there's no other questions, comments, or anything. Roku. Okay, Roku. Buy now that investing you cover great stocks. Oh, 100%. Hey, appreciate it, big man. You too. I know you guys. There's so many stocks out there. I just want to cover the ones I understand. I don't want to really cover. There's so many stocks out there, right, that are probably going to do really good. But I'm not going to talk about something I don't fully understand. So tomorrow for S&P, I would say we're looking at. You want to definitely get a hold here of 443. We could come back and test 443. And it looks like 443 and 449. 443, 449. Those are the big levels for S&P. 443, 449. Maybe we trade sideways into Friday for S&P. And then I know you mentioned Roku. Hey, Roku's presenting another. Here's the thing about Roku. It's been holding that 50-day moving average. So watch for the support on the 50-day. It's at 78, 79 right now. Right? And it's forming a wedge. I mean, it's pretty clear. We're getting a wedge here for Roku. And if I just draw this out, I mean, you got a wedge there for Roku. So, yep. I still like ZM better, but fundamentally, I mean, there's really not much. It's literally inflation tomorrow. That's what we're looking for, that CPI number. So let's talk a little bit about that. Let's talk a little bit about CPI here. Go to the data. All right, so core inflation month over month, those are going to be the bullish. These are going to come out a little more bullish than headline. I still don't think headline's that bad, though. I know people think headline's going to be bad. I don't think it's going to be that bad. The month on month for core is probably going to, headline is probably going to be very volatile because it's a month on month reading versus the year on year probably won't be as bad. I think the year on year inflation rate actually comes in much better than the month on month. The month on month is probably going to look a little more ugly because oil went up 3%. And then year on year probably doesn't change much. I still think it's going to be below this consensus at 3.6%. Core should be solid. Core comes in at 0.2. That'll be how many months in a row? That'll be 3 months in a row. We're coming in at 0.2, which is really less than 0.2. Like if you look at the micro data, core has actually been coming in less than 2%. What is, if you annualize that, right? If you annualize core, you're looking at 2 flat. You're looking at 2% inflation, pretty much. So the Fed is at their target. There's just a lot of risks there, right? Because if they announce it, here's the negative. Here's why the Fed doesn't want to really say this. They're using backward looking data. They want conditions to remain tight. And if they do say, we've decided to pause, then you basically, the bond market starts to ease up. They start buying bonds, right? Rates come down, the dollar drops, the stock market goes up. You start to ease financial conditions or loosen them. Therefore, people start to get crazy and people start spending more because their stocks go up. Their collateral lifts. Therefore, the more collateral you have, the more you can borrow. Wait until next week. Don't gamble here. Oh yeah, nobody's saying to gamble. I thought you were gonna say wait till next year. I was gonna say, well, yo, Maxi, I don't know about that. Yeah, I would never. Yeah, trading CPI is not smart. 100%. Unless you're looking for a longer term support play or something like that, following CPI, you really want to look at the levels after CPI, where the high is, where the low is, and see where, where there's a spot that can really an inflection point that can actually blow off top to the upside or to the downside. So yeah, you don't want to trade on core. You want to digest the data. If you're a short-term trader, you don't really care. But if you're a long-term trader, if you're looking a little more long-term, you want to wait till everything digests and say, okay, where do I pick my spots? I'm looking at AMD. Tesla and AMD are the two I'm looking at. Best technical setups in my view. Tesla has better catalyst at this point, depending on who you are. But that's it. Now you get PPI the next day too. So PPI is going to be important. Who knows how PPI comes out? It came in at 0.3 last time. This might be a little sticky too because of the oil prices. Oil is a lot of inputs for a lot of people. So, core, but you got core PPI that's probably going to come in very low. This probably comes in very low, core PPI. So I think, looking forward in a couple of days by Friday, I think the S&P is holding above 444 by Friday. Just taking a guess, right? I don't know. I think we're holding above that level. Anything crazy? You get some China stuff on Thursday. Net exports, imports, manufacturing, industrial production on Friday, inflation expectations. So yeah, tomorrow's the big day to set everything. I'll be in here. I'll be back on here, back on time this time, because I'm not presenting a long forum. We're not talking about crypto. So today we did talk about crypto. Let's just go ahead and cover what we spoke about today as we close it out. If you missed the stream, it's on YouTube, so you can check it out on YouTube. But I definitely want to cover this because everybody's talking about Tesla, and you got Gary Gensler, right? You got Gary Gensler on the hill, at the hill, speaking. And hey, check this out. This was interesting. I remember I got this. FactSet, or the number of ETF fees, are exploding. So there's two parts of inflation that have actually been lifting. Services. I'm top Bitcoin. What does that mean? Anyways, there's services, and that's coming from obviously energy prices going up, and then also, and I'm gonna get you guys questions, comments. There's also financial services went up a lot on the CPI. So look at this. The number of ETF fees are increasing significantly. So what does BlackRock want to do? They want to tokenize to lower those fees. That's why I'm so bullish on tokenization. And I think, obviously you guys know, I think Chainlink leads that rally there. I'm top Bitcoin billionaire crypto. Okay. I don't know what that means. What's your take on Amazon? Good buy point or wait, ask a friend. I think if you're looking 12 to 16 months out, Amazon will be much higher than here. It's one of the big mega caps that's been suppressed. And I think it goes much higher from here. They're about to come out with this very, very elaborate AI for businesses when it comes to ads, not ad revenue, but advertising. They're coming out with the most advanced AI advertising, or advertising AI, artificial intelligence. So once that gets factored in, it's going to get a lot of business there. So two major catalysts for crypto. The business cycle, we already talked about. Global liquidity. Is the Fed going to pause rates, right? How close are they to pausing rates? I think tomorrow's going to give us more insight on that. And then because once you pause, liquidity collateral goes up and you have more liquidity. We see the Fed balance sheet is going down, but the collateral, or the money market fund liquidity, which was at $2.5 trillion, is still seeping into the capital markets. And hey, trust me, those big money guys, they know tokenization. They know the ETF is coming. They're going to take some risk in Bitcoin because they see the wallet addresses are increasing for crypto in general. They see that the growth rate for crypto is just as fast, if not faster, than the adoption of the internet in the early 90s. and you know, it's coming. So yeah, and then you have the halvening next year. I mean, it's gonna be insane over the next 12 months. The only thing that could outpace probably Bitcoin and Ethereum that are over $100 trillion, not Apple, not Google. I don't think Amazon either. It's probably going to be Tesla. I think Tesla's the only thing. Nvidia, I think Nvidia's made its run. It's sort of cyclical. Maybe I'm wrong about Nvidia. Could be wrong about Nvidia. I'm not going to say too much, but Tesla, Bitcoin, Ethereum, that's my take there. Billionaire crypto, I'm a pro investor. Oh, okay. So, okay. All right, cool. Pro investor for Bitcoin. Do you have a question, or did you have a question or anything, or were you just letting everybody know you're a pro investor? Quant XRP XDC. I'm gonna close out the YouTube. Thanks YouTube for sticking along there. That's all the info I had, and we'll be back tomorrow for CPI. CPI is gonna be huge. A lot of data that's gonna come out, and I'll be on time tomorrow. I should be on time tomorrow. I know I was late today, but I had a lot of stuff to take care of and do a lot of editing. So we'll catch you guys later. Thank you for showing up. TikTok, I'll answer these questions on TikTok if you guys are not already on there. Subscribe if you haven't. Don't forget to hit the likes. YouTube, help me with the algorithm if you don't mind. And we will catch you guys tomorrow. Thank you. Stay blessed. Stay blessed. Improve every day.